An iron condor has 4 contracts, right? A call sell, a call buy, a put sell, and a put buy. Bringing together 4 contracts to find an iron condor with good quality. In terms of liquidity, that are at the right strikes and that are delta neutral, is very complicated to check manually, since there are thousands or millions of combinations. But in this video, we're going to show you how to find them very easily with a setup we normally use. Now, let's start with the setup. The first thing we're going to do is set it to expire before earnings. Next, we'll define in how many days we want the expiration. In this case, we're going to set it between 30 and 45 days. We're going to select, for the leg width, the distance between the contracts, a maximum of 5 points. Then we'll select where we want, at which delta we want the put to be, the put sell. In this case, we're setting 0.15, 0.25. Why are we choosing these deltas? Because we want it to stay outside the expected movement. At expiration, this is to have better odds. To make sure, in this case, that we have contracts that have some liquidity and that the spread does not widen too much so we can trade them at a mid-price. That is fair. Let's say the spread between the bid and the ask for each contract has a maximum opening of 30%. So that will make sure we can filter and find contracts that we can trade at the mid-price much more easily. Then for the calls part, we'll set the same, right? That it's between a delta of 15 and a delta of 0.25. And in the same way, we'll set the maximum opening to be 30%. Now, something important that we usually use is the IB rank. We want it to have at least 30% IB rank to find slightly better premiums. And well, now let's apply the filter and see what kind of contracts it gave us and what options. Okay, as we can see here, it gave us 58 results across 18 different tickers with 3 different expirations. So what are we going to do to start filtering in a simpler way right now? I'm going to narrow it down so it only shows me one idea per ticker. So I'm going to set the max ticker to 1. Now we already have our results here. Let's take a closer look at a couple of results to see what we have here, right? In this case, we're going to analyze apples. It already shows it to us here. It highlights the strikes 225, 230, 265, and 270. Is that visually, we can automatically see where the strikes are. This is really important so we can decide without having to go to a chart, a graph, to see where it would be, right? In this case, it tells us that the call side would be in this area. As you can see, the contracts, both in the calls and in the puts, are outside the expiration cone. This cone shows us the expected move at expiration. So in this case, since we are outside of the expiration move, the expected move, well, we have a higher probability of success with this iron condor. Something very important is that they are as close as possible to delta neutral or delta zero. If we look here, the net delta is minus 0.02, so it's basically delta zero. Now let's really see how much this iron condor is offering us with the current market conditions. It is showing us that at the bid, meaning at the worst price we could get, they pay us 1.59, which is the price we will usually get if we choose quality contracts. They pay us 1.87. That means if the contracts stay out of the money at expiration, we would receive a 59.7% return on investment. Why do we have good contracts in this case? Because we have filtered, as we saw earlier, so that the spread between the bid and ask of these contracts is very tight. If you notice, the spread on the put sell is just 4.3%. And the spread on the put buy is 5.6. We can also see here that the spread on the call sell is 5.2% and the spread on the call buy is 7.4. That guarantees us liquidity. It guarantees that they will be able to enter into good contracts so we can negotiate them at a good price. And visually, it's very easy to see where our strikes are to check if they make sense for what we expect from this trade. Now let's review another one of the ideas that the screener gave us. If you notice, here we are in IBIT. It gives us really good contracts. In terms of liquidity, since they are pretty tight, if you notice on the bid, in the worst case, it's 0.30. On the mid, which you can negotiate perfectly, it's 0.36. A return of 55%. A completely neutral delta at 0. And if we look in this case at where the strikes are, they are above this part of the resistance, above this area we would consider support, and they are completely outside the expiration cone. So we really have a pretty solid idea that we can trade with these iron condors, and so on. We will go through the different options it gives us. If you notice, here we can see this other option called the SMH, the ticker. Still, here there is a bit more openness in the contracts. If you notice, here we have on the bid 1.50, on the mid 2.23. There is a little less liquidity. Most likely here it is on the call side, but you can still easily negotiate the mid with an 80.20% return. If it were to be negotiated on the bid, then it would be a 42% return. Again, a delta of 0 completely. And if you notice, well, the call side is below this area, which we could call some support, and it is above this resistance. And both contracts are outside the expiration cone. Let's make the zoom a bit smaller here so that you can see it. So it's very simple for us to find iron condors that really work for what we're looking for, right? Here we can see another option in Amazon, and in the same way we can go one by one, right? Now, what happens if you want to view different options on a single ticker, right? So on the part we have here on the right, what I'm going to do is set it to show me all the tickers. In this case, I select all of them. And then what will I do? I'll go here to all tickers and select one, right? Let's look for one that has several options. I'm going to remove all of them in this case, and then I'll put, for example, IBIT, right? I see that it has 5 different options. So if you notice, once we're on IBIT, and we want to trade it, it's simply hovering over the 5 options we have and seeing which one we like best. As you can see, every time I move the cursor down, the strikes open up a bit more, right? Or they adjust themselves. So this way it's very easy to find either the ticker you're looking for, or in different tickers,